Welcome to the Greenroom, a new podcast series by Sustainable Buildings Canada designed to help the building industry stay informed about the latest trends and techniques for building more sustainable buildings. I'm Jeff Fredericks, and I'm joined by Sarah Keys, CEO of consulting firm ESG Global Advisors, Lee Hodgkinson, Head of Sustainability and Technical Services at Dream, and Scott Rouse, Managing Partner at Energy Work, an energy management consulting company based in Toronto. We're thrilled to be hosting another episode of the Greenroom Podcast. Today's episode will focus on how real estate companies are approaching their environment, social, and governance commitments. We're going to talk about it broadly in terms of expectations, influences, and strategies, and then get into some specifics. So let's get on with the show. Okay, Sarah, well, let's start with you. Why don't you tell us who you are and what you do?
All right, so I'm Sarah Keys. I'm the CEO of ESG Global Advisors, and I have the pleasure of serving on the board of Sustainable Buildings Canada for the past couple of years. ESG Global Advisors is a boutique advisory firm that focuses on bridging the gap between companies and their investors or providers of capital on all things environmental, social, and governance, with a pretty heavy focus on climate change, as you might imagine.
Great. How about you, Scott? How about you tell us who you are and what you do?
Yeah, thanks very much. Scott Rouse, Managing Partner of Energy at Work. We work a lot with existing buildings, commercial buildings largely, helping them meet their objectives, largely through energy efficiency, but that's expanded into energy audit, existing building commissioning, special projects, rates, really anything that's going to help them move forward. And what's happened, I'd say in the last 2 or 3 years, is environmental social governance has been becoming more and more important, particularly around carbon neutrality, net zero, etc.
Gotcha. Lee, same question to you.
Yeah, I'm the Head of Sustainability and Technical Services at Dream. I oversee 2 departments, as the title kind of implies. One is the Sustainability and ESG team, so we set the sustainability and ESG priorities across the group of companies. But then I also oversee the technical services team that actually executes the capital projects, about 30 million or so a year. So the people that are actually setting the targets for us sit side by side with the people that actually have to do the work. Dream is a $24 billion group of real estate companies comprising of Dream Office REIT, Dream Industrial REIT, Dream Unlimited, Dream Impact Trust, and Dream Residential REIT, which, as the names imply, invest in office, retail, multifamily, all industrial asset types as well, across Canada, US, and Europe.
Great. Well, welcome, guys. This is excellent to have you all in the same room. Okay, so we're going to start with a little context here. We know that in cities around the world, buildings, of course, generate more carbon emissions than anything else. In Vancouver, for example, 55% of all emissions are come from buildings, and of course, in places that are significantly colder in the winter and hotter in the summer, those emissions can be as high as 70%. So I guess the question is, as we start to think about the urgency that building owners and operators face right now, the question for you, Sarah, is over and above that urgency to address climate change, what are some of the other forces driving real estate companies to act now?
Yeah, I would say one of the primary forces that we observe is that institutional investor pressure that's really on public companies that are seeking financing to decarbonize and ultimately to grow. So there's really an imperative now for all real estate companies, no matter where you fall in that value chain, to really have your ESG story right. And I think there's really increasingly a risk that if organizations are not telling that story, their providers of capital, whether debt or equity, they're asking for it, right? So I think there's a concern that ultimately, given the exposure of the real estate sector as a whole to the rising emissions problem, and of course to the policies designed to decarbonize our economy in Canada, investors are paying close attention to this and saying, how are you preparing for that low carbon transition?
Right. And I guess, if there's a sort of a follow-up question to that, it would be, what are some of the expectations and the roles on ESG for those key stakeholders? So the tenants, the developers, the property managers and owners. Maybe you can share a little bit on that.
Yeah, and I think that's one of the biggest challenges with ESG is that it's a really broad range of stakeholders that you need to consider when you're really determining what are those most important issues. Because I think ESG can mean a lot of things to a lot of people, and it's really important to really prioritize what are the most material factors that we absolutely must get right. And so a lot of the time what we see with our real estate clients is conducting a materiality assessment as that starting point. And that's where they kind of talk to the tenants, the developers, the property managers, and depending on what's in their control or outside of their control, unique to the organization, it's really important that they build and maintain those relationships. I can certainly speak to, our clients in the space. Tenant satisfaction and affordability is top of mind from a social standpoint, and trying to balance that with the imperative to invest money in decarbonizing is a really tricky challenge that we see them trying to strike that real line in terms of the trade-offs. So I think it's important as well to recognize that there's kind of different roles for each of the different players in terms of how they execute on that mandate. And that's what I really liked about how Lee framed his introduction. I think we often see kind of the corporate side setting the target, but then there's really the whole impetus on those who actually operate the buildings and those who live there to follow through with the actions that align with the achievement of those goals.
Well, then let's get Lee's perspective then. Lee, did you agree with what Sarah had to say, and can you add to it from an owner point of view?
Yeah, no, definitely agree. I think that, I can talk to the tenant perspective and I can talk to the investor perspective, which Sarah highlighted as well, because at the end of the day, as a building owner, those are your most important stakeholders, right? One is revenue and one is capital, basically, right? And so from a tenant perspective, we believe that, for instance, our ESG framework and our, net zero goals, for example, they help our tenants achieve their own goals in a lot of ways. And so that alignment is really, really powerful for us. And so they might be committed to net zero by 2050, but just by moving into one of Dream's buildings, you might already be on track for that goal. And the truth is, most tenants still view, rent, office space, really interesting space these days for sure. Most tenants still view office rent as one of their lower operating costs for their business, right? And so if they have a choice between, changing a manufacturing process and really having to solve a tricky problem, or just making sure that their office employees are all in a closer to net zero building, this is actually really a low-hanging fruit for them in a lot of ways. On the investor side, they want two things. They want market or above market returns, and they want to see that you can do two things at the same time. That and do some good. And so we really do believe in the concept of doing well by doing good. So we can do two things at once. We can have a really great business that generates profits for our investors, and we can also build better communities. And so we really think that you have to do both. And if we can prove that out, which we've been doing so for over 20 years, then the market does follow suit as well.
I really like how you frame that, Lee. Just in terms of barriers, because I think a lot of people that are going to be listening to this podcast are going to be interested to hear how one overcomes some of the perhaps more obvious barriers, but why don't you give us a little sense of what some of those could be and how to kind of overcome them?
Yeah, I mean, so there's some of the obvious ones would definitely be change management within an organization, and then even things like access to skilled trades and technology and equipment. So those are real problems today for sure. But one I'll flag maybe is just access to capital. Okay, this is a barrier and an opportunity. So I'll touch on the barrier side, which is depending on the study you review, building a net zero building from scratch is somewhere between, some studies will say 5 to 15% more expensive, and some will say 50 to 100% more expensive. Why the big range? Well, the big range is that there's still a lot of price discovery occurring. There's still a lot of evolution occurring within the space. You build something once, or if you go to Toyota and you ask them to build you one car, that's a really expensive car. But if you ask them to build you 100,000 of them, that the 10,000th one is actually pretty cheap by that point, right? And so there's a lot of evolution occurring in that space, and that is going to drive down those cost premiums from, again, what people originally said was going to be like 50 to 100% more expensive, down to that 5 to 15%. Now, the opportunity side is really interesting because, look at today. We're in a real capital crunch from a macro perspective. Access to capital is really, really tight, and yet the opportunities for financing, climate change mitigation, and such as through like net zero transitions of assets and buildings, that's not that tight in a lot of ways. And so we're seeing that is solving a problem that we have as just a core business, but also aligned with our goals. To date, over the last number of years, we've issued $850 million worth of green bonds to help our Dream Industrial REIT kind of keep getting more green on their portfolio. We've issued $400 million worth of sustainability-linked loans for Dream Office REIT to help them. And then we've even secured $136 million from the Canada Infrastructure Bank to deep retrofit, decarbonize 19 of our buildings. So that's a pretty great opportunity.
Yeah, it sounds like it. I want to bring you in, Scott, on this discussion here around barriers, but also opportunities, as Lee framed it. When you're speaking to your clients, what are some of the things that typically come up? And maybe we talk about cost, because I imagine that's probably one of the first things you get hammered with. How do you frame that discussion, and how does it generally go?
Right. Well, there's different clients for sure. And I think you have to deal with each client in their own individual way. Lee's a client. We deal a lot with Lee and his properties, and he's not looking so much at cost as value. And he, I think you described that really well. And that's a whole different conversation than, let's say, a mid-tier. And a mid-tier is looking a lot more. I would say they're looking a lot more at the cost as opposed to value, for depending on that asset. Is that asset going to be around, or is it going to be redeveloped, et cetera? So what we've found worked very effectively is to try and not focus on the cost, but look at what the value, what are we trying to achieve? And not just looking at carbon neutrality as part of it, but the path to carbon neutrality. We've said very much that we don't have to be net zero today. What we have to be, or what, depending on the client's objectives, they might want to be net zero by 2050, 50% by 2030. Those are common objectives. So, okay, what do we do in the short term? And there's a lot of cost-effective tools. Existing building commissioning is a perfect example. 8 to 15% you get off the top. Another big opportunity is to look at right-sizing equipment. We've seen a lot of equipment that is way oversized. Mm-hmm. And by right-sizing it, it makes alternatives a lot more affordable. Leah, you've used the term that we design our buildings for one day of the year, or 2 days of the year, the hottest day and the coldest day.
Right.
And you're 100% correct. So what do we do with those 363 days that it's not the hottest, it's not the coldest? And those are the kind of opportunities that are very cost effective. It's a matter of communicating that. And to Sarah's point, how do we get the operations folks to buy into it and not just see it as a barrier, but see it as an opportunity?
Mm-hmm. And I suspect, just on that point, I mean, technology is playing a big role in how buildings perform and operate. More and more smart technology, AI is helping to monitor occupant behavior and things like that. Is that a big part of the conversation when you talk about ESG today, is where the intersect with technology takes place?
Yeah, it is very important, and we talk a lot about fault detection diagnostics and improving the building automation systems, et cetera, et cetera. But I think the one important element is people. We always talk about people, process, products. BAS or fault detection diagnostic is a product that we need to implement. But I think also having those people engaged, as Lee said, if you don't have the people that are making the decisions communicating what they were trying to achieve to the people that are actually operating the building, then you're just hitting a brick wall. Yeah. I had a really good meeting a couple of weeks ago. It was with an asset management company, and the CFO was asking what we were doing. And we talked about our energy efficiency, our upgrades, et cetera, et cetera. And he said, "You're the ones we want. We can talk at this level, but we need the people that can actually do it, be part of the conversation." So it was quite a relief to me to hear somebody at that C level recognize that the work that we're doing on the ground is actually going to get them where they need to go.
Right. I want to bring up a recent CBRE survey that was published in the Globe not too long ago, and it found that almost half investors said that they would seek a discount or walk away from a deal altogether when considering a building that has high energy consumption and carbon emissions. And so the key deterrent is government-imposed penalties for buildings that pollute too much. And so the next question is really for all of you guys, and it's the approach question. So what approach is more likely to accelerate action? The stick in the form of penalties and fines, or the carrot in form of incentives and rewards. And Sarah, why don't we start with you first?
Right. Well, because I get to go first, I get the easy answer, which is both. Now, look, I think, in terms of the change management component of all of this, it's a big undertaking. I mean, I think the whole concept of net zero is still quite nebulous in most people's minds. And that long-term time horizon means that we really need to use policy levers as well as those carrots to bring it into the current day. I think that's one of the biggest things, when we think about why institutional investors have focused on this in the first place, it's exactly as Lee said, superior risk-adjusted returns, full stop. So they really require both of those levers, right? So when we think about what the providers of capital are thinking about and what they want to see, they of course want to see those incentives that Lee just mentioned in terms of that access to capital is one, but even the cost of capital associated, you can get lower interest rates on some of those debt products if you actually exceed or surpass your targets related to net zero and sustainability. So investors love to see those carrots, but they also think that it's really important to have the sticks in place, because I think with this change management exercise, the other piece of it is some companies are going to want to lead, like the likes of Dream, and others are going to want to be the industry standard, right? Not everyone has that ambition or perhaps the resources, the capability, and the skills. So we kind of need the sticks to bring everyone along and create that kind of minimum baseline. I think the main thing that investors and organizations of all types going all the way through the real estate value chain is data. They're looking for data, they're looking for information, and I think that's what a lot of those sticks are all about, helping folks get clear on exactly what it is they need to be gathering and reporting so that those who provide that capital and other stakeholders in that ecosystem can get a really good sense of how they're taking that 2050 goal and bringing it into today.
Interesting. Lee, anything to sort of add to that perspective?
Yeah, I mean, I think that with the sticks and the carrots right now, we're seeing a bunch of different test beds, right? So you've got places like Ontario and Montreal, City of Montreal, starting to just say, hey, we just want you to disclose data, right? EWRB in Ontario, for example. And then you've got places like, Toronto, you have a bit of a carrot approach with the Toronto Green Standard, for example. Hey, if you do better, we'll help you save money type of thing, right? And then, you're starting to see the sticks really come in, places like Vancouver and New York, where, hey, if you don't hit these thresholds, here's a financial penalty. So, we're going to see which approaches kind of are the most effective, in our lifetime, very soon in a lot of ways, right? And so I think that's going to keep going through that. I think what I wouldn't forget about in this approach would be capacity building. So you can throw all the sticks and carrots you want at people, but if you don't really kind of solve the plumbing problem of access to materials, access to skilled trades, things like that, it's really, really tough to actually get the results that you want. So I do think that governments, for example, need to be prepared for that long investment cycle of building capacity while they're starting slow, maybe just disclosures, then throwing a couple carrots and then throwing the sticks. They have to be investing in the capacity building. Simply put, if there's more refrigerant technicians in the City of Toronto, my dollar per hour to get something done, installing a heat pump, will go down over time. Likewise, if there's more heat pump manufacturers, eventually the heat pumps come down in price as well. So I'm really curious about how we can also contribute to that part of the cycle, if you will.
And just to pick up on something you said there, that article I was referring to that was in the Globe talked about Vancouver and the bylaws that they've imposed. But I guess the city officials said the intent's not to gather the fines. The intent is to help encourage and guide those people that are struggling along the way, share knowledge. And that's kind of what we're trying to do here too as an organization, is to share knowledge and best practices so it is a little easier. On that note, Scott, in terms of sharing best practices, I mean, you're meeting with a number of different clients across the spectrum. Are you starting to see some trends by way of approaches that are common, and maybe some pitfalls that you think are worth sharing?
Sure. I would like to talk about the carrots and sticks as briefly, though, because I'm a big fan of carrots. I find that people are very innovative, and that innovation can sometimes, when there's a fine or penalty, they can find a way around it. But if the carrot is strong enough, they can also be very innovative in finding a solution. So I'm a big fan of carrots, just for the record. But as far as, I don't think that there's I think as Lee said, I think a lot of organizations are struggling with trying to find what is their path, because it depends, there's a lot of variables. Who's the owner, what the asset mix is, et cetera, et cetera. So we're seeing a lot of people, I think you referred to different rose beds that they're trying to look at.
Test beds, yeah.
Test beds, yeah. Mm-hmm. So I think that's what we're seeing a lot of. And I'm hoping with these kind of conversations that people say, let's stop fighting. I think we talked about that earlier. Yeah. Let's start working together. The other thing that Sarah said that I thought was really good, and I've heard this used a lot, is data is the new oil for today. Data is, what's going to help us get the right information to the right people at the right time to make those right decisions. But data by itself is not, it's like oil. Oil by itself, unless it's refined, it's useless. Mm-hmm. So I think we need good data, and we have to have people understand that data and to be able to use that to move to the next step.
Good point. And I think another piece of this puzzle is certainly on the education front, right? And we're hearing more and more about, in a number of organizations, look, I just don't have enough people in-house that know enough about ESG and trends and what we ought to be doing as an organization. So I want to pick up on that as a discussion point as well. And Sarah, again, I'll ask you about the role education plays in advancing the ESG objectives for an organization. Is it something that organizations should put more energy towards educating their employees and getting them more engaged in this journey?
It has become an increasingly large part of all of our mandates. We really tend to work with the C-suite and the board, whether it's at the company itself or the provider of capital on the investor side. I think there's a lot of myths and confusion around what ESG is and isn't, what the net zero imperative entails. And I think, Scott's point earlier is well taken. We don't have to be there tomorrow. And I think there's a whole lot of education and capacity building, to Lee's point, through having dialogue. I think one of the most important things is not only keeping that dialogue at the top of the house. So often what I find is it's actually the top of the house decision makers who are saying we need to set the net zero target. But it's really important that education bleeds all the way down to the folks who are going to be responsible for operationalizing it. What does it mean to me and my role? And that's where I'm starting to see larger clients get more sophisticated. It's gone from a half an hour to an hour with management and the board through to a series of online learning by function and group, by different asset classes. And we're starting to see that education has become a really interesting means to engagement, change management, and capacity building. Because oftentimes, and this is where I think we've missed the point, the folks on the ground who are operationalizing it have a lot of brilliant ideas about how to hit those targets. And that's where I think the education often surprises those at the top of the house when they get down to those operational levels. It's like, wow, maybe this won't be as challenging as we thought, or we have some champions here that we didn't realize we did.
I like the word champions too, because it is important that one recognizes who those folks are, because they can, of course, influence throughout an organization. Finding those champions that can be at any level, but they're passionate folks, they care deeply about the topic, and they want to get engaged. And so Lee, at Dream, maybe you can share with us a little bit about your approach to helping keep employees engaged, but also educating them on what's happening.
Yeah, well, and again, just for reference, the Dream group of companies, Dream Office REIT, Dream Impact Trust, Dream Unlimited, we're committed to net zero by 2035. Dream Industrial and Dream Residential are committed to net zero by 2050. You don't make bold commitments like that unless you have really a lot of people excited about it. So I'm really, really fortunate that at Dream, the vast majority of employees are taking up the call and are really interested and excited about this opportunity. It gives them a fair bit of meaning in their roles, which maybe they didn't have before we kind of really understood this problem and set out to try to do our part to solve it. So, one concept I'll just kind of flag would be, what I get to, kind of view across our platform is what I'll call centers of excellences. So, for instance, we own a ski hill in Colorado called Arapahoe Basin. On their own, they looked at their little business and they said, you know what, we think we can get carbon neutral by 2025. Awesome. Great. Tell me how you're going to do it. Let me understand what's going on here. Let me help you where I can. But they came up with that. They're the ones that are driving that bus. So my team gets to act as a central repository for strategy and for knowledge. But these centers of excellence across the platform really help inform us of the wins, the losses, the lessons learned, and all this stuff in between. Other examples, in Europe, the regulations are changing rapidly to actually require renewable energy on buildings. All right, so we have our German teams telling us how they're doing solar in the best manner that they can, and we're using that to inform how we're deploying solar in Alberta. So, we think that having people really engaged leads to a feedback loop, which we really, at the end of the day, my job is just to help disseminate that information across the group of companies.
Excellent. And, coming out of the pandemic, we heard a lot about war on talent being a big theme. I wonder, to what degree do you feel, having a solid ESG strategy, but also putting the education piece in the mix is, a competitive advantage when recruiting top talent? That's a question for all you guys, but maybe in reverse order, I'll start with Lee again. If you could just tell me at Dream, how do you see the reputation that you're building in this being attracting top talent?
Yeah, I mean, listen, when we're doing hiring, we regularly hear from people that they feel that our values align with theirs. And that's really, really powerful. I think, you can kind of go back to the consumer good kind of market, maybe 10, 15 years ago, where you had those bigger companies really try to focus on employees and being aligned with their values. And now I think you're seeing that in the real estate sector a fair bit, where people are realizing, well, I'm going to come to work 9 to 5 and I'm going to work on a building or whatever I need to do in that building or in that real estate company, but I'd really like them to be aligned with our values. And so we get a lot of great feedback from that for sure.
Great. And what about you, Scott, just in terms of the clients that you...
Yeah, well, actually, building on what Lee was saying about, getting the message across and being excited about the work, etc. We had the good fortune of setting up ESG training for a lot of Lee's staff. And what impressed me is the commitment they made. So we had 64 people that were dedicated a whole day to what can I do with respect to ESG. And so it was pretty well the same program, but it was spread over 4 days because we didn't want to try and talk to 64 people. That doesn't work. We wanted to talk to small groups. And so we organized it and looked at what the operator could do, and also tried to help them understand that this is achievable and what are we going to do, and some specific examples. So what we found is that especially a lot of the young people they want to participate in something that is meaningful and has value to it. So it's what frustrates me is I can't hire more people, because there's a lot of good people that want to work in this space, and to your point about capacity building, I think we need to be able to have more mentorship, apprenticeships. I think there is going to be a shortage of skilled tradespeople that can deal with the heat pumps and AC systems. Building automation systems is becoming a real problem because we're losing a lot of people that have had the experience. And how do we transfer that knowledge to the people that are coming into the field? Real challenge.
Yeah, good point. How about you, Sarah?
I'm glad you asked this question, because I think this is the win-win on the net zero conversation, which is we know we need way more people, we need all hands on deck, we need to build capacity, and yet you've got these younger generations, and I'm in the millennial cohort, but wow, the Gen Z generation, we look at this now, taken together, they're the largest in the workforce. That's only going to continue. They're going to continue to work where that aligns with their values, to Lee's point, but they're also going to want to invest where it aligns with their values in the long run. Millennials are set to inherit the largest intergenerational wealth transfer in human history, and most of them are twice as likely as their boomer counterparts to actually decline to invest in a company because it doesn't align with their values. When we look at the role of trust in all of this, I think, the public has multiple views when it comes to the whole net zero transition. Edelman Trust Barometer comes out every year. we've seen a consistent shift of trust toward public institutions to address the issue of climate change, actually squarely looking at business to do their part. And when we think about the costs of the net zero transition globally, 2/3 of what it's going to cost to transition is going to come from the private sector. So you've got all of this young talent who increasingly, by the way, have degrees in this stuff that did not exist when we were, getting our education. They're keen, they're enthusiastic, and they're asking really tough questions in interviews. And it's not just about attraction. I think the whole retention and development component of the human capital is also really interesting. I think you see a lot of this, they jump really quickly to other roles. How do we retain them? Engaging them in the longer term imperative of where the company's trying to go has become a very successful tool that I think is getting attention from companies and investors alike.
Well, and going back to your word about champions, that's why I think it's so imperative that organizations recognize there are going to be champions within the organization, seek them out, identify them, nurture them, give them what they need to help influence others within the organization, because the retention piece is also very important. From what I understand, that is one of the biggest threats to a lot of real estate companies, is this jumping of ship that happens frequently. And so how do you keep your employees, your top talent employees, engaged in making sure that they're aligned, or they understand what the ESG targets are, and that we're making progress is important, right? Yeah, absolutely. Guys, just wrapping up, this has been a great conversation. I think it's important to take note that this is a fascinating time to be in the real estate space and involved in ESG. And I'd love to get your thoughts, your sort of closing thoughts, if you will, on why you think this is an amazing time to be in this space. And maybe it's a message of optimism, of course, that I'm looking for. So if you could talk about, your dreams of the future and where you think we're headed in terms of actually meeting some of these ambitious targets. Sarah, I'll start with you.
Yeah, I genuinely often say this is perhaps the most interesting time in human history to be alive, because when we think about the climate crisis, when we think about the net zero imperative, we are alive at the time in which we can really make the impact. So my message is, the next 7 years are really going to determine if we stay on course for this net zero by 2050 world that we desperately need to get to for a stable climate, so that we have, an economy that can succeed and a society that is supported in a thriving environment. So I would say, it's incredibly exciting. There's so much work to be done in the next 7 years. Yes, it can feel overwhelming, but we need all hands on deck. So I think it's just such an amazing time to be in the space.
Great. How about you, Scott?
I'm very excited. I think that when I look at, I've been, obviously the gray hair, I've been here longer than anybody else here. And I had this dream 20 years ago that we would, and it was triple bottom line back then.
Oh yeah.
Economic, environmental, social responsibility. And it kind of petered out. But in the last 5 years, I've seen this growing interest. And I just, as long as we can continue to demonstrate real results, I think that's going to be key, that people can actually continue to believe and see the benefit of making these choices. And I think the benefits are there. So yeah, I think I agree with you. It's going to be exciting, and we're all in this together. COVID taught us that, so we all have to pull together. And it's a matter of trying to bridge those communication channels that we're talking the same language. Perfect.
Lee, last word to you.
Yeah, I think it's a really exciting time because the commitments are made for the most part. What people thought was going to be the hardest thing, which was convincing the C-suites and the boards to make commitments. That's largely done for thousands of companies across Canada and even more across the globe. So we're actually in the period of change right now. And so I think that that's just an amazing challenge. So it's not about talking the talk anymore. It's about walking the walk. And so, we've got 12 years to hit some of our targets. I've only got 2 to hit other targets, right? So we need to be running as fast as we can right now towards these. And I also think, the tool set is largely there for us to meet these goals. That we're not really waiting for a silver bullet. So knowing that, all right, the commitments are made and the obstacles are surmountable, I think it's a really fun time to be in this industry.
Excellent. Well, thanks, guys. This has been a great conversation. Look forward to doing it again.
Yeah, thanks Sustainable Building Canada for putting it together.
Yeah.
That's good.
Terrific.
Thanks for having us.
All right. Well, that's it for this week's show. We hope you enjoyed it. Please subscribe for future episodes. Check us out on Twitter and our website at sbccanada.org.